Wynn Resorts, very nice resort hotel in Las Vegas. Basically, Steve Wynn is, hey, he's really added a lot to Vegas over the years of his career. And he's also started most of the better major hotels on the Strip. The story behind Wynn is that Steve Wynn and Wynn Resorts are going to report earnings. Those earnings are going to be reported Monday after the close. Okay? That's tomorrow. We also have Mosaic and we also have Big Blue. But let's take a look at this stock on a weekly level. Wynn Resorts has made huge revenue streams, profits, out of Macau. And when you take a look at the Las Vegas comps and you take a look at the Macau comps, there's a big difference to the bottom line in these earnings. What I'm telling MMTs and everyone, that on the weekly chart, we've had a 3 weeks, so we're going into earnings season. So what is the main thing about these earnings is how does the stock front run itself, and how much of that good news is already baked in the cake? Well, I can tell you right now, 84.46% is that Wynn is a little too much overbought going into the report. And not only that, the last time that Wynn was at 79% was back on 2/28 of 2007 and had a big ass correction. Because the beta on the percent DS is a little bit different than something like Google and Apple and Netflix and CMG and all of those and whatnot. What we are focusing on is how Wynn has ran anticipation for tomorrow night's earnings. We will be taking a look. They do not have weekly expirations. We will take a look tomorrow on how we're going to get this put to call ratio for all of these various strike prices in here where the stock is in the different videos that will put those scenarios in there. Okay, long and short both, calls to the upside, puts to the downside. Now, having said that, you can see the tops up here. We have really burned a bull trend in this Wynn again, and parabolically straight up going in tomorrow's report. So these are the tops over here back in 2007 where it collapsed. Great buying opportunity when it was down at the bottom. The thing that we're going to focus on is the 2011 weekly trend right here. This is all of 2011, okay? And we started breaking higher right here. My point of it is we do get overbought at times. These overbought corrective cycles here, when Wynn was up here, this is back in 424, the percent DES then was at 90% on this weekly. Which meant that we were going to have a correction, and we made a high of 149, and throughout that correction we made a low of 128. We corrected $20 in the name, but then we came right back when the markets put in the bottom. We had a huge up week back when we were calling the bottom the low. This stock on the low of this bar, weekly bar, was 130. We have ran $32 from this weekly breakout to this overbought cycle, and it can get more overbought because it could get up there to 90%. There could be some upside volatility, but you got to know one thing: the street already knows what the Macau earnings are, and people have bid the stock up going into the report tomorrow night. And we're going to look at the fact that Wynn can gap higher and it can gap lower in the after hours market is where we're going to take advantage of it. But once again, part of our criteria is we let them go until they can't be any more overbought and they have to correct, just like over here. Just like over here. We ran $32 to the upside. Now, having said that, when you look at the daily percent DS, it's at 92.13% in the shorter term cycle of this daily chart. The daily chart is that we have broke out for several days, just like it shows on the weekly. Here is that top. Here is the breakout at resistances. This is what used to be resistance. This is a big overhang, and that's where that correction was, down here to that bottom right here. So when we took out this major resistance level here, we've rallied on up. We kind of pulled back here to the support level where this trend line is, and we've had 2 days of breakout. So in the last 2 days, Wynn hit a bottom here. It was low as 156 to the high of 162. So you've already ran about $6 back up and made another yearly high, 2011 yearly high. We're overbought here. So when Wynn reports, the more overbought it gets, all those earnings are priced into the stock. You can get some upside volatility, but our trade management on the upside volatility would be able to short that extreme overbought level. It's on our radar. We will watch how it trades tomorrow. Then we will watch the monthly expiration of August and the calls and puts. And one of the things that we'll do, I'll just give you an example, is when we'll take a look at where the calls are. They move a little bit different, but we would go back to that 155 call that's in the money. These things are up here at the top. You want to talk about call contracts that are overbought? I mean, look, hey, when they were down here at 83 cents, that's the time to be buying them, when Wynn was putting the bottom in before the breakout. What's going to happen with the bull, they've got such high risk, because if you're not selling these things up here when they got inflated here, the calls at the same price was these were $12, and then they pulled back here. They had a $4 pullback from that overbought inflated area, and now we're right back up here. So it's a double top inflated call. So the bulls, even with all the good news, if they sell the news, these calls are at the top. They can get a little bit more overbought, but they won't stay up here, MMTs. And we'll go through the next video with calls and puts, and vice versa. Here's a 150 put. At one time, it was up here at $21. Now we're down to $3.60. So we'll be looking at a 150 put below the market in the next video. We'll come and take a look at this call option right here. 160 call, that's up here. So when people start buying up at the top where these calls are inflated, investors and traders, they got a big risk, because what they don't know is a lot of the good news in the short term is baked in the cake. The pie has been baked to those good forward-looking earnings that Wynn is going to produce tomorrow after the closing bell. That's just one train wreck. However, you could take a look at the 165 call. It too, this are all the call contracts up here inflated. You could also even look at the 170 call up and out of the money. These things end in a bad way. Hey, you wanted to buy them down here at 20 cents and sell them up here, that's the time to do it. And there's a way of doing things. And I can just tell you that the 170 call up and out of the money is inflated. And of course, you can't buy something like this because they're inflated. You got 90% risk. The risk-reward ratio is limited. We'll go through different videos and different calls. I can tell you when I'm looking at a 160 put here, which is below the market, this thing is getting even more deflated. And it's so deflated that a lot of times, buy the rumor, sell the news, these pop up and the inflated calls pop down. We'll go through a different video. Wynn Resorts earnings preview. We will do a total risk-reward ratio options on calls and puts, diversified risk management. Okay, and where does the bull, why is the bull vulnerable? Yeah, good earnings are coming. But why is the bull so vulnerable? Because we're already bought. We ran in anticipation.